Hello, good morning, everybody. Welcome to Phillip Securities Research weekly market outlook that we do on Mondays. Today, as usual, I'll be giving the market outlook. And then after this, we'll have a update on CapitaLand and also a feature on the regional gaming sector by Madeline Chung, our gaming analyst. Okay, so let's begin. Okay, there we go. Okay, so Asia ex-Japan markets are actually generally positive. So you can see the trend line that we've drawn here that has been quite a strong short-term upward trend line. Actually, the overall trend for Asia is still positive. Okay, but this rebound here has been due to evidence mounting for Asia and China bottoming out in terms of the economic data. Okay, so this is supportive for the STI in terms of the STI's context, right? However, we do urge short-term caution for the next few weeks ahead because the STI has actually dojied at the upper downward sloping trend line that you can see here that has been an effective resistance since October 2010. So that has been a reliable resistance, and when we left the office, actually we have moved slightly outside of the trend line. However, we're selling into the strength. I'm not sure what it's doing now, but anyway, okay. So we do urge some short-term caution due to that proven resistance line, and why we also think so is because the S&P 500 is at the neckline that you see here that I've drawn, which is a confluence of resistance given the neckline and also the 50 daily moving average. Okay. Okay, so what's actually going on? Okay, although Asia looks economic data is fairly positive right now, as you know, there's the fiscal cliff. Okay, and the S&P 500 at this juncture anyway has more influence over the STI than APX Japan or ASEAN. This isn't always the case, but I think this December it is. Okay, due to the fiscal cliff. All right, in terms of negotiations for the fiscal cliff, President Obama is proposing $1 trillion worth of tax raisings from the wealthy, plus $600 billion worth of revenues from closing tax loopholes. Okay, that's over 10 years, so that adds up to $160 billion per year. Okay, on the spending side, he's proposing $400 billion in cuts to entitlement spending. Okay, Republicans have balked at the idea. Why? Because last year the president asked for $1.2 trillion worth of tax raisings, which was 50% above the previously agreed $800 billion. Okay, so he's actually asking for twice as much as he asked last year. Okay, and he's kept the spending cuts at $400 billion. So, and talks broke down last year on $1.2 trillion. So now he's asking for even more. Okay, so the president is fresh from election victory and is asking for even more while giving the same. From our point of view, we think it's time to compromise rather than steamroll your opponent, even if you did do much better than him during the elections. Okay, while the presidential elections are a signal that Republican ideology was rejected by the U.S. public, we don't think they will accede so easily to $1.6 trillion worth of revenue raisings without some hue and cry. So we think some kind of volatility over the weeks ahead is quite likely. Okay, looking further out, okay, beyond the short-term trading outlook, assuming we get a deal, we are actually getting constructive going into 2013, so that means progressively positive. We think the investment outlook is actually getting better. Macroeconomic data is weak, but we note the positives, which is that the economic rate of slowdown in Asia is easing. China is actually showing signs of bottoming out, which could pull the rest of Asia up. U.S. macro data is still mixed. Housing is good. Consumption is mixed. New capex orders has been bad, but October was actually pretty good. And we think if we do get a resolution on the fiscal cliff, capex orders will rise dramatically. Okay. third quarter earnings for the STI was actually in line. And we're thinking that markets may actually start looking past the bad for what could be a positive first half of next year, so long as the fiscal cliff gets resolved. Okay, so Asia's rate of economic contraction is easing. So that's evidenced by even Singapore's own industrial production. Okay, overall industrial production may be falling. Okay, if you look at the dark red line, but actually if you look at core industrial production, which is excluding biomedical, we are actually progressively moving towards the positive territory. Okay, China's industrial positive has actually flipped. China's industrial profit has actually flipped positive. And U.S. New orders for core capital goods actually had a surprise October result, which shows the sequential rate of contraction easing. That's the blue line, and the year-on-year 3-month average also starting to ease. So that's even before the fiscal cliff is getting resolved. So that's quite good. So yeah, we're positive. We're getting more and more positive for the first half of next year. And our equity strategist, Derrick Heng, is not around today, but his top picks so far are still the same. So he recommends CapitaLand, which Brian Goh, our real estate analyst, will give an update shortly after this, before Madeline gives her regional gaming. So he recommends CapitaLand due to China's bottoming out and property prices there getting tame. So that means further tightening is not that required. CapitaLand offers significant exposure to China's property market and is currently trading at a significant discount to NAV. Okay, SATS is the dominant ground handler in Singapore and in-flight caterer at Changi Airport. Okay, he thinks that there's going to be a payout, a dividend payout that could be quite substantial this year. As you can see in the bottom right slide, he thinks it's possibly 26 cents. Okay, and has the potential to continually grow dividends over the next 3 years. And yields are very attractive at the current price. His top buy is actually SIA Engineering. Okay, it's the dominant line maintenance for engines for Changi Airport. It's got very strong joint ventures with very healthy capital distributions to the parent, and it's got a base load of orders from SIA. The thing about SIA EC, it's actually a play on the total capacity of airplanes generated in Asia ex-Japan, rather than about short-term ticket prices, that SIA faces. Okay, so it's not really a pure airline play in that sense, but rather a play on the total capacity of the industry. Okay, so now I'll pass you over to Brian, who will give you an update on CapitaLand.
Hi, good morning. This is Brian speaking here. For the past week, corporate news, stocks updates. We have CapitaLand here. On Thursday, they submitted a top bid for a residential site at Bishan, which is right next to their current project, Sky Habitat. And the new site could yield about 445 units. And the tender price of 855 per square foot is about 3% higher than the second highest bidder, but it's 1.9% lower than the price that they paid for the Sky Habitat site in early last year. And we view that as a defensive move by CapitaLand to maintain their selling price at Sky Habitat. As of October, Sky Habitat is about 141 units sold out of the total 509 units, and selling price ranging from 1,430 to 1,890. And with that, we estimate their latest site, the break-even price could be around 1,200, and eventual average selling price could be around 1,005. That gives them margin of about 25%. And with that, we actually maintain our RNAV, but we lower the discount to RNAV to 5% from the previously 15%, as the recent economic data from China show signs of economy bottoming out. And we believe CapitaLand's well-diversified portfolio in China could benefit from the current tailwind, and that we increase the CapitaLand fair value from $3.55 to $3.97, and we maintain our accumulate rating. And next, I'll pass on to Madeline, our gaming sector. Thank you.
Hi, good morning, everyone. I'm going to do gaming sector right now. Okay, let's look at gaming stocks relative to the stocks in other sector. Like, why would you want to invest in gaming? Right, gaming, it's volatile, it's got high beta, it's cyclical, it's low dividend yields, right? Now, the way I look at it is, gaming is very good to invest in if we are in an up cycle, in the economic cycle. So being cyclical, the potential for it to rally, it's there. If economic growth is growing, it's greater influence in the market. And also, what I really like about the gaming sector is it's got a lot of hidden beauty. The first part, it's a vice. A vice means that it's got a lot of repeat customers. Okay. Secondly, it's built on maths. As long as there are people walking into the casinos gambling, then the maths in your slots, the maths on the tables will say that chances are the people will eventually lose money, and that means the casinos will eventually win money. So if I take this quote from Mario Puzo, who's the one who wrote the book on The Godfather, I think this is a very relevant statement which is mentioned in the book. Now the third one is the slots. Okay, the devil is in the details. If you look at all the slots machines, right, the way the ring sound, the dynamics of it, the visual graphics of it, all of that, right, is actually calibrated to increase a gambler's time on device and to encourage play to extinction. And where you can find slots, slots are found near the cage, near the coffee table, the coffee area, along the aisles, so that whenever somebody wins, the slots will go ringing, with all that jackpot money. The slots would be in a good position for everyone to look at it, and people will look at it and go like, oh, okay, this person won a jackpot, I should go and try the slots too. So that's how they try to position their slots to increase people to come and gamble on the machines. Okay, and if you look at the casinos in Asia, where are they found? We have in Australia, we have Philippines, we have South Korea, and even North Korea has them too. And Vietnam, Cambodia, India, Nepal, all these places. Okay. If you look at this area here with countries with casinos, okay, now the ones highlighted in bluish is Singapore and Macau. The difference between the casinos here versus the rest of the other places, is that both Singapore and Macau has got integrated resort. So in other words, they're actually packaging gaming, which is a vice, into a product with entertainment value. So that structure is unique in the sense that with your hotel, with your theme parks, with your conventions, all of that will encourage people to come and visit the integrated resort, and some of them may be enticed to try their luck at the casinos. So as I said just now, that the more people walk through the casino doors, the better it is, for the casino to win money. Okay, and we have got the new frontiers, which are the Japan and Taiwan. Look on the right hand side, there's the 3 key gaming locations in the world. A lot of people are saying that, oh, Singapore will surpass Las Vegas Strip. Okay, now if you look at the statistics from January to September, Singapore is still lagging behind with 3.4 billion of gross gaming revenue, whereas Las Vegas Strip is about doing 4.6. Macau is 27.9, far above the two markets. But if you look at the number of casinos, okay, you can see that Singapore only has got 2. and they are Las Vegas Sands and Genting. So in that sense, Singapore is doing better, on a per casino basis compared to Las Vegas Sands and to Macau. Now, if you look at the taxation of the market, why it's in a way why Singapore does well, also because in Macau the tax is 35% of gross gaming revenue. Las Vegas Sands is 6.75% of gross gaming revenue, and Singapore, it's a differentiated tax, 5% of VIP and 15% on mass. And the way that the junkets or marketing sales for is being structured is that in Macau, junkets run the rooms, independent from the casinos. The casinos has got no say over who or what kind of people the junkets bring in. But in turn for this business, junkets are paid 1.25%. Now in Singapore, they have international marketing agents. These people, yes, are paid the commission. They're allowed to give credit to customers as well, but they're not allowed to run rooms individually. And in Las Vegas, what we have is the company sales personnel that goes around marketing, getting people to come into the rooms to play. And for that, they get commission, but they are not able to bankroll the customers. Now, the factors impacting this sector is one, the affluence factor, which will impact the discretionary income available to spend on gaming activities, and of course the concentration of millionaires in or near the country. And I think this is also the reason why Singapore or Macau can be very successful. Now also the next one is the number games. This will probably explain to us why Las Vegas Strip could continue to have gross gaming revenue greater than Singapore. Because if you look at the January to June period, they have 19.9 million visitations versus Macau, which has only 13.6, and Singapore is only 7 million to date. Now, because we do regional gaming, so I believe there's something for everyone. If you're looking for growth, we have Las Vegas Sands with Galaxy of Neptune Group. If you want exposure to, say, Cambodia, we have Naga Corp. If you want a dividend stock, Naga Corp, which pays about 5% dividend yield. And if you want undervalued, it's MGM. But for MGM, be prepared to stay long-term with them, okay? And the reason why I say that they're undervalued is also because their price to book is only 0.9 times compared to the rest of them, which has got multiples of 3, multiples of 4. Look at the local stocks first, Genting Singapore and Genting Hong Kong, before we move on to my recommended stocks. Now for Genting Singapore, okay, the gaming comprises 80% of the revenue, and for our valuations on it is that it's only we have only a neutral call on it because the fair value is 1.15. The fair value it's based on 11 times EV/EBITDA, and the price is about 1.15. Okay. The investment merits for Genting Singapore is that it's a duopoly in Singapore. Okay, it's in a way it's protected by the government. It's got very high EBITDA margins because of the favorable tax regime that we have. This business is very high cash flows. Got to cash out 2 billion because they raise funds from preferred securities. But what we don't like about this company is that because of they raised 2.3 billion from preferred securities, it means that dividends have to be paid out to the preferred securities holders, then the equity holders. Now they raised these funds, 2.3 billion, but more than 1 billion of it, right, it's invested in unknown quoted and unquoted securities, which they do not share with us what they are. And that makes it very difficult for us to assess the risk profile of these securities. Now, in recent quarter, they have 30 million of FX losses. But if you track back, every quarter they only announce about 2 to 3 million only. So suddenly you shot up like 30 million. So to me, there's a bit of a lack of transparency there, Also, if you look at, okay, I actually have got a chart. If you're interested to look at a chart on Genting Singapore versus the STI, email me. I'll send it to you. From the charts alone, right, you can see that Genting Singapore is the only company, okay, that has underperformed the index. Okay, companies in Hong Kong, in US, all of that, right, has outperformed or slightly outperformed their index. Only for Genting Singapore, which has underperformed the STI. Okay, and I think part of the reason is because Genting Singapore, they do not have any plans for expansion compared to other gaming stocks out there. So even though they said, oh, they want to expand to Japan, but it's still another, 12 to 18 months before the government will approve gaming. And we move on to Genting Hong Kong. Now, Genting Hong Kong has got three business segments. One is the gaming. They have the cruise ship, which they will, they got seven ships. Then they'll sail out to sea under Star Cruise brand name, and there they will have gambling activities on board. Now, they also own 50% of Miami-based Norwegian cruise line, and 50% of Resorts World Manila, and Bayshore, which is together with Travelers under the AGI group. The merit is that in the Philippines, the government owns about 60% of market share, okay, and which is under the PAGs, the PACO, and Genting Hong Kong, which owns Resorts World Manila, has the remaining 40% of the market share, and they are the first private casino operator in Philippines, and they are developing a second one, which is called Resorts World Bayshore, which will be ready in 2016 for phase 1. Okay, and they're going to, double the size of Resorts World Manila. And under the cruise business, the NCL group is expected to increase the fleet size. Okay, now the only investment concerns which I think we have is that other than the construction of Resorts World Bayshore, okay, 3 other competitors will also open casinos in Entertainment City. Okay, and that of course will erode market share from Genting Hong Kong. But perhaps together with Resorts World Manila and Resorts World Bayshore, okay, together we can expect that revenues and earnings for Genting Hong Kong will increase compared to current quarter or current year earnings. Look at another growth company, it's Neptune Group Limited. Now, Neptune Group is a little bit different. It's not a casino operator, it's a junket operator investor. Meaning to say that they invest in junket operators, they bankroll the junket operators. Now, junket operators in Macau will get 1.25% of commission, but Neptune finances the junket operators and will get 0.4% commission on the rolling chip turnover. Okay. Now, right now, it has got about 51 tables. Okay, in 16 tables in Venetian Macau, 12 at Sands Macau, 23 at Galaxy. And what they want to do is they will be expanding, okay, to 11 tables at SJM, 24 tables with MGM, and 39 tables with Wynn. Now, these contributions are expected to come in by the end of first quarter 2013. So that's double capacity. Okay, and being a junket operator investor, okay, they are not impacted by defaults from high rollers, and the business is very low in capex because it doesn't need your machineries and labor and all of that. What it only needs is large financial capital to finance the junket operators. Okay, and next is also it's got a very strong cash flow, and the company said that it's expected to give out dividends within the next 1 year. Now, previously, this company hasn't given out any dividends at all. Okay, so with the expansion of tables, the potential for dividend payment is there as well. For Las Vegas Sands I think has always been our favorite. Now, what we like about this company is, if you're looking for growth, it definitely has got growth. If you're looking for dividends, it does not give out regular dividends, but as and when it does, the dividends can be very attractive, like the recent one, which is $2.75 per share, and that's about 5% dividend yield. Okay, that's just a special dividend. Now it has got expansion plans as well, which is the 4.4 billion Sands Cotai. Okay, phase 1 and 2A has already opened, and then phase 2B and 3 is expected in 2013. Now it's got a highest market share. I think it's over. He has already went above SJM. Okay. Now it's got a duopoly in Singapore. 50% of the market share is protected because of the government. Strong cash flow. And after Macau is done, they're starting plans to open casinos in Spain. Now, Sheldon Adelson, to me, I think it's almost like a visionary because he was the first guy who went to Las Vegas Strip and said that, oh, okay, I'm going to bring convention business. Nobody believed he could do it. He did it. Okay, and when he went to Macau, he reclaimed the land at the Cotai area, and nobody also believed that, oh, casinos it will be popular in Cotai because all the casinos then were all located at Taipan. So again, he reclaimed the land. He made Cotai a very popular spot, and now he's thinking about the expansion plans in Spain. Well, chances are, I believe that the plan will be successful if he lives to carry through his plans, given his track record. Okay, Galaxy also, okay, 96% of the gaming revenue from gaming and entertainment. Again, it's got expansion plans. Okay, it's net cash, 1.5 billion, able to give out dividend use if it plans to. Okay, I think it's one of the hottest stock in Macau right now. For Naga has got very good dividend use of about 5%. So if you're looking for dividend use, I think Naga is the one. Also growth as well. And Naga operates casinos in Cambodia and it's got protected market share. Okay, it owns a 70-year casino license that will run to 2065 and a 41-year monopoly, okay, within 200-kilometer radius of Phnom Penh until 2035. Okay, so it's protected. And I think the visitations to Cambodia is also growing. Okay, I think from the January to September 2012 period, it's 2.7 million, which is an increment of I think nearly 20 to 30% compared to the previous period. Okay, and expansion plans also developing Naga 2, which is 200 meters from Naga World. Okay, expected to complete in 2015. Now, the risk factors for most of the casinos, because it's the same sector, so of course, they will face default risk from the VIP clients if clients do not pay their debts. They also face regulatory risk. Okay, for Naga, sorry, it's not the China government, but it's the Phnom Penh government. And of course, the economic growth, credit crunches, all of that will have impact on the sector. Now, MGM Resorts International, I think, fell to $1 in the past. Okay, nearly went into bankruptcy problems, but they sold off its assets to free up cash flow. Now, what is really dragging this property is that if you look at its business segments, 53% of it comes from gaming revenue. Okay, and geographically, right? Okay, it owns nearly I think nearly 60 to 70% of the casinos on the Las Vegas Strip, and it's very much exposed to US market compared to the other casinos who are more exposed, say, to Macau, or have a more better geographical exposure to Singapore. So MGM, it's because of its business segment, 53% in gaming, the geographical segment exposure to US, and also because of city center, which is a drag on its earnings, okay, which isn't performing as well as they had expected. I think this company, in a way, it needs a bit more time to resolve its issue. Perhaps when we see greater economic growth in US, that potentially we get more convention business in Las Vegas Strip, and more people will come in to gamble. More business visitors will come in and gamble. So if you want to invest in this company, be a little bit more patient. It doesn't pay dividends. The debt, it's at 13.8 billion, still relatively high. But if you look at its valuations, I think it's the cheapest that you can get among all the other casinos. Okay, and come 2017, it's going to expand, and the new property in Macau will be scheduled to complete. Okay, Wynn, I put Wynn here because Wynn is for people who still want to invest in gaming stocks, but are very conservative, okay? Because Steve Wynn himself is not the kind of person to invest aggressively. He only has got 2 casinos in US and 2 casinos in Macau. And after a few years, then he decided that, okay, he wants to expand 1 more casino in Macau, which is scheduled to open in 2016. Okay, dividend yield is not fantastic, but it's very consistent at 2%. It is said that I think he's going to raise his dividends from 50 cents to $1 per quarter. So that dividend yield could push up to 4%. Okay. Now the frontiers wise is the Taiwan. I think nobody has bidded for projects in Taiwan, but Taiwan has voted to allow gaming. So it's we still have to wait and see, as to who's interested in Taiwan. Okay. And the potential, of course, is in Japan. Pachinko industry is about 250 billion. Again, we await the government to approve gaming in Japan. Okay, so these are the 2 hot frontiers. Okay, and lastly, because this is a gaming sector presentation, right? So anybody who think that they've got people whom they know who may be suffering from problem gaming issues, you can look for the National Council, okay, to refer them to. Okay, with that I end my presentations. If you could ask questions through the webinar, or if you feel more comfortable, you could always email me or call me. I'll be happy to take your questions now. Thank you. Got one question. Okay, we've got one question here, which is how will opening of Taiwan and Japan gaming sectors affect Singapore? Well, if you look, okay, let's use Australia as a case study, right? Okay, when Singapore gaming opened, okay, it affected the casino revenues in Australia. So similarly, we do believe that if Taiwan and Japan, open casinos there in the integrated resort style, yes, to a certain extent, there will be some impact on Singapore market. Okay, the second question I have is can you recommend the entry prices for gaming counters that were featured? Okay, if you want like entry prices, I think that's when we have to look at the chart to help us. For me, my personal view is this: because I was formerly from CFD, right? So we do a lot of technicals there, and to me, the best way to evaluate an entry as well as an exit prices is via charts. And because I don't have charts with me, I'll be very happy if you could contact me and we can look at the charts together. Do you have further questions from the people? How would the new marina affect Genting performance? I presume that when you say the new marina, you're referring to the new cruise center that's opened up. I would actually think that if we have got a new cruise center, and if more cruise ships come to Singapore of larger size and can berth here, I think. The new marina park. Okay. I think of course. Okay. If you look at the new marina park, we believe that for the first quarter, okay, or last quarter, and the first quarter of 2013, okay, we should see improvement in earnings for Genting Hong Kong, which, when they announce results, right, will potentially increase Genting's share price. But when we look at the earnings that were announced in the past, okay, before they issued preferred capital securities, and which I think earnings were in the 280 to 330 million dollars region, okay, we would think that the opening of Marine Life Park would only bring Genting's earnings closer to to last year's earnings. This year it's reporting results like 130 mil, 180 mil, which is below our forecast. So the Marine Life Park, yes, it will potentially boost Genting's share price from current share value, but we believe that the price level, okay, will also eventually be reduced because of the hype, because the hype is over. Okay, because again, if you look at my valuations, it's only $1.15, and it's based on 11 times EV over EBITDA, which is the sector's average. Okay.
Hi, it's Joshua Tan back here, head of research. Are there any more questions? You can ask actually on anything you want, because the whole team is here to answer your questions. So you want to ask on banking or REITs or property or even the macro, you can just shoot. Okay, here's a question. If Obama is firm on his stand, what is the impact on the market? Yeah, if he's firm on his stand, I think it's a mistake, because even though he has won pretty decisively in the elections, I don't think the fact that he's asking for twice what was previously agreed. If you look at last summer, it was an $800 billion tax revenue raising agreement that between him and the Republicans, okay, and they kind of agreed on that, and then Obama thought, well, no, actually we need more. So he asked for 1.2 trillion, right, which was 50% above that. Sorry, not about 50% above that, and that caused us to have the deadlock. Okay, so now he's asking for twice 800 billion, and I think it's a mistake actually. That's why we think, although charts look pretty good in terms of short-term trading, I think there's probably going to be some volatility because they're not going to give in so easily to that amount of tax raisings. Okay, the next one. What do you see the REIT sector? Are they overvalued? Okay, I'll pass you on to REIT analyst.
Hi, this is Travis here. Regarding the REIT sector, in my view, I don't think it's overvalued, but however, it's in rich valuations. And in these circumstances, we have to be selective in REIT pickings. Some of the REITs are also kind of high in value, but they are still catalysts. If you have a mid to long term view, yeah, some of them are like some tech REIT and AIMs, which are trading at discount to their NAV, which has potential to gain the next year. Yeah.
Hi, we have a question here on Olam. Unfortunately, we don't have coverage on Olam, so we're not exactly experts on Olam. I would say that the question also says, is it a good opportunity to collect? Okay, so we're not experts on Olam, but we can give you a little bit of opinion on Olam. The price now is has bounced off support levels, and it's quite key support levels as well. And the valuations are, I think, in the high single digits. So for growth stock, it's cheap. Okay, now the thing about Olam is that I think there are good points and bad points on both sides. Olam has a business model which is highly capex intensive. Okay, so if you don't have the growth to justify all that capex, then the market will punish you, and which I think it has this year already. This capex drive will continue. Cash flow wise, I do agree with Olam that their inventories are very liquid. Okay, so if on an adjusted inventory basis, the cash flow is not that bad. However, like I said, it's a high capex business. Okay, and 2016 I think will be the do or die time for Olam, because it has to show that kind of phenomenal earnings growth to justify the capex and eventually turn it into cash for investors. Okay, so I think if you want to collect it, then it's probably not a bad time to do it. Okay, the valuations are low. It's jumped off support. Okay, but it's a stock I think where you have to really be on the ball for. Okay, because the growth has to justify the capital investment. Okay, we have a question on Far East Orchard, but we don't have coverage on it. Sorry. Any more questions? Okay, how do you see the banking sector now? I'll pass you on to banking analyst.
Hi, this is Ken, the banking analyst. For the banking sector, currently we expect it to go to be in line with the macro environment. Previously, we upgraded our core on UOB from reduce to accumulate, and since the initial dip, UOB counters recovered quite a bit, and so has he has actually, I believe, performed pretty well compared to DBS and OCBC. Moving forward, we expect it to trade within range, likely affected mainly by any changes to the macroeconomic environment. But in terms of fundamentally, all three banking counters remain fundamentally very strong and are expected to register positive growth in FY13 and FY12.
Okay, we have a question on Yo Hyap Sing also. Okay, we're actually looking at Yo Hyap Sing, although I think I should take this question offline with Mr. Lu Ming Kwek, who's also interested in Far East Orchard. So, Mr. Lu, if you could email me, joshua.tan@phillip.com.sg, and then I could share with you on Yo Hyap Sing and Far East. We need to do a little bit more research on these stocks to give an intelligent comment. Thanks. Okay, thank you very much for attending this webinar. We'll be sending out emails shortly on when our next one will be. So thank you very much, and hope to have you guys attend the next one. Thank you.